Good morning, hello and welcome to Opening Bell. I am Surabhi Upadhyay. You're with us on Moneycontrol and we're tracking the markets middle of the week. It's Wednesday and global cues are actually quite all right. The bulls have shown that they do have some resilience, some reserve here in India. We've had three consecutive days of gains on the street. The question, however, is can the bulls conquer 26,000? Because around that mark is where we saw some hesitation. A lot of final results are coming in. Remember, it's the fag end of earnings season. We've got some good numbers to talk about, including Titan, including Apollo Hospitals. So we will get to all of this action in a bit. Let's start up with the headlines. Wall Street wrapped up the session on a mixed note. S&P 500 edged lower as AI-related worries weighed on financial stocks, while the Dow powered ahead to yet another all-time high. Meanwhile, U.S. retail sales for December fell short of expectations. Investors now turn their attention to the January jobs report. Asian markets largely trading higher, brushing aside weak U.S. retail sales data. Japanese markets are shut on account of a local holiday today. In China, consumer inflation for January came in softer than expected. Back home, GIFT Nifty is signaling a positive start for Indian equities. Crude oil prices bounce back after losses in the previous session, supported by lingering tensions between the US and Iran. Gold prices ease ahead of key jobs data and US inflation numbers due later this week. Earnings remain in focus. Titan delivered a strong set of numbers with revenue surging 40% year-on-year. Eicher Motors also reported a solid beat, posting a 23% rise in revenues. Attention now shifts to Mahindra & Mahindra, where healthy growth is expected. MSCI has announced its latest index regime. Aditya Birla Capital and L&T Finance are set to be included, while IRCTC will be excluded, with the changes taking effect on the 27th of February. BHEL also in focus. The government plans to divest up to 5% stake via an offer for sale, expects to raise around 4,500 crore rupees. Retail investors will get a chance to bid on Thursday. All right, so let's quickly dive a little deeper in some of these cues that we've mentioned. On US markets, on Wall Street, it was actually a bit of a range-bound session. There was some profit-taking that we finally saw. The Dow ended flat, couldn't quite punch through. The S&P 500 and the NASDAQ, we saw some declines coming in over there. Not too much, just about 0.3% to about 0.5%, so nothing too much. Just a small pullback in those AI names and those big US tech names. The disappointment yesterday on the data front came in the form of the retail sales print. Flat retail sales in December versus the expected increase of about 0.4%. The number was also lower compared to the rise of 0.6% in November, the previous month. So basically, retail sales data was disappointing. Now it's going to be all about the jobs report. The January report comes in today, delay because of the government shutdown. The street is working with an expectation of 55,000 jobs being added in the US in the month of January. So let's see if that's delivered or not. Now, as we're going through some of these macro prints, US yields were largely rainbound. It was a little soft actually, 4.1% on the US 10-year after the retail sales numbers missed expectations. There was some weakness in the dollar as well. The DXY, the dollar index, has pulled a little further away from the 97 handle. So the dollar cool-off continues as well. Japan is closed for a holiday, as we told you in the headlines. And the China inflation numbers are in focus. We've got a whole range of data out of China. And CPI in China is up 0.2%, which is, of course, half of what the poll was expecting. The poll was that CPI inflation in China would be 0.4%. It's come in at only 0.2%, and that's leading to some caution in the region as well. Gold and silver, by the way, the markets were very range-bound yesterday. There was about a 1% increase on gold prices this morning, as we can see. Again, the market is quite focused on the jobs report. And Brent crude remains just south of $70 a barrel. All eyes continue on those negotiations and the diplomacy that's underway between US and Iran. Now for us, the Nifty managed to head towards 26,000, but it couldn't quite cross that threshold. Markets, of course, have been up for 3 consecutive days. The question is, can the momentum really take the index above 26,000 or not? The near-term supports, as a lot of experts say, are quite firmly in place at around that 25,400 to 25,500 zone. Yesterday's fund flow picture, just to wrap up the cues, Domestic institutions were buyers. They bought equity worth just under 1,200 crores. FIIs, no follow-through buying. The previous session, we had a nice big FII buy number, but even yesterday, we had a number of just about 70 odd crores. So that's the overall setup and the cues that we're working with today. Let's straight away get to our technical experts. We have Jatin Geria as well as Gaurang Shah joining in. Gaurang on the fundamentals, Jatin on the technicals. Gentlemen, good morning to both of you. Jatin, let me come to you. The market is trying to show some sign of life, some momentum. But yesterday, we're also seeing a little bit of a hesitation at higher levels. What's the Nifty trade? Do you see one at all today?
Yeah, good morning. So yes, we believe that since last three trading sessions, we are seeing that up move. So there are a couple of points that I need to highlight. So post that testing of the 25,500 support zone, the Nifty has witnessed back-to-back two gap up openings. Now, what we see here is that the gap up openings are being sustained at higher levels. We see the market breadth that is improving drastically. Apart from that, what we see yesterday's trading session is that 26,000 strike call option on the monthly option chain saw some unwinding. So that indicates that the call writers are a bit hesitant on the higher side and they are unwinding their position. So combining all these data points, we believe that the uptrend is well and truly intact. Yesterday, we saw a minor dip towards that 25,400, 25,900, 25,880 mark, but that was bought into. So overall, I believe that the uptrend is well and truly intact. Now the crucial support to keep in mind is 25,800. That is the 20-hour moving average. So we are riding this up move. On the upside, the target area that we are expecting is 26,100. So any intraday dip should be considered as a buying opportunity.
Okay, so intraday dips should be used to buy. That's the advice on the Nifty. Got that, Jatin? Let me hop across to Gaurang as well. Gaurang, morning. Couple of good days in the market, some decent earnings as well. What's your sense? Are we set for a bigger, wider up move, or is the advice to just remain, very stock specific and selective?
Thank you so much, Surabhi, for having me on the show. Good morning to all your viewers of Moneycontrol.com, to you and your entire team. A small disclosure, we may go into stock-specific recommendation as well. So all recommendations, Surabhi, that I'll be sharing with you on your show this morning are part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So being stock specific is always better in stock market, Surabhi, because putting your money onto anything and everything that your finger lands onto is something that is not advisable. So stock specific, large cap, mid cap, sector specific, small cap is definitely something you should be aware of, and you should be investing your money accordingly. As far as the market is concerned, I think this week, Surabhi, will be the curtains down for third quarter earnings. Will be done and dusted. And to sum it up, whatever we've seen up till now, I think the good thing was that there are no dark spots. Some small misses here and there, company specific, but I don't think that's a huge red flag or any kind of negativity or overhang. In terms of sustainability on the higher side, upward move, my sense was on Monday, in fact, we had given out on our company's YouTube Geojit Spotlight video that if we are able to sustain about 25,800 and if we cross over decisively 26,000, then the move towards all-time high, I think there was something close to about 26,370 and beyond that cannot be ruled out. The handover in terms of global market and Asian market is supportive. So my sense is that if we are able to take off and stay above 26,000 on Nifty spot, then momentum on the upside will continue. However, having said that, I think as you were mentioning, on fallback of Q3 earnings, number specific spotlight will be there on such stocks like you were mentioning Titan. I think that was a great set of numbers yesterday that we saw. So company specific moves will be there. And I think from a short to medium term, if you are a trader, you can act accordingly. But if you are an investor, if you miss the ride post budget or during the budget day, when the Nifty was at about 24,500 thereabouts, correct me if I'm wrong, I think this is still time to nibble into some great fundamental ideas from a long-term point of view.
Okay, all right, and we want to get to some of those ideas in just a bit, Gaurang. Let me do one thing. Since you brought up earnings, let me quickly run through some of the stocks in news today. I'm only picking up some of the bigger earnings. Of course, we had a whole, raft of numbers that came in yesterday. There are some stocks in news beyond earnings as well. So here's today's list. Let's quickly go through it. Titan, let's start with the index heavyweight. The numbers were more or less in line. The margin was actually slightly above estimates, and overall growth rates are looking very, very good for Titan. That's the key takeaway. You've got a revenue bump up of 40%, a profit growth of almost 48%. The EBITDA line is looking very, very solid as well, 54% up on EBITDA, and the margin has improved year on year. It's now come to about 10.4%, which is a lot better than last year. And this is despite the fact that the company had to take on the labor code wage impact, which was about 138 crores. Overall, jewelry sales were looking good. The festive season boost came in rather well, despite those record high gold prices. And even the non-jewelry business has shown pretty good growth in the quarter gone by. So all-round beat from Titan. Let's come to Eicher. Another good set of numbers coming through here. The profit is up about 21%. Revenue growth for Eicher Motors at 23%. And again, at the EBITDA line, no comparison or no issue at all. 30% growth at the EBITDA front. The margin has improved to 25.5% as well. So overall, very, very strong results. Volume growth in Royal Enfield as well as the commercial vehicles business. Both have been very, very robust in Q3. Royal Enfield EBITDA margin has expanded, and the management is expecting high single-digit growth for the next financial year as well. So, keep some of this in mind. Also, Eicher has said that it is planning to expand its Royal Enfield capacity to 2 lakh units per year from the current capacity of about 1.46 lakh units. So capacity expansion happening, margins looking good, volumes looking good. Super set of numbers from Eicher Motors. Let's come to Britannia. And the cookie is tasting more or less as you expected to, I guess. Profits coming in at 17%, revenue growth of about 8.2%, more or less in line with estimates. EBITDA growth of about 16%. And the margin has shown improvement, which is the heartening fact in Britannia's numbers as well. The margin has climbed to 19.7% versus about 18.5% last year. Let's talk about Apollo Hospitals. Healthy is the word you can use for Apollo Hospitals. No complaints. Profit growth of 35%, a revenue growth of just over 17%, EBITDA growth of 26%, and again margin improvement. Apollo Hospitals' margins are almost touching the 15% mark at the end of Q3. Hospital growth, reported a growth of about 14%. The hospital business, lots of, volume growth seen across different therapeutic categories. The pharmacy business and Apollo 24/7, there the costs have continued to decline. So that's another positive point. Quickly moving to Oil India, this is not looking too hot. Revenue is down about 1%. Profit is down about 16%. There is a bit of an EBITDA gain. But on the top line front, it's been a little sluggish. Margins are better off because crude oil prices, remember, started perking up towards the end of the quarter. Now let's come to Jubilant Foods. A very appetizing set of numbers, you'd have to say. For Jubilant Foods, the company that runs, of course, Domino's Pizza, one of the key brands, revenue is up about 13%. The profit growth is looking very strong. 65% profit growth. 20% EBITDA growth and a margin improvement as well. Margins for Jubilant have gone up to almost 20% versus 18.7% last year, same quarter last year. There's 5% like-for-like growth at Domino's, and Popeyes has continued to record high double-digit like-for-like growth as well. So it's looking good. 78 new stores added, and the turkey business is also reporting strong numbers. So Jubilant is another good set of numbers to watch out for. Wrapping it up, Grasim, profit up about 26%, revenue again up about 25%, and an EBITDA growth of about 31%. So Grasim's numbers look fairly steady. So those are some of the stocks in news. Beyond the earnings, as I said, there are some stocks we should keep on our radar. BHEL, because of the OFS, like we told you in the headline, the government will be selling 3% stake. And then we have Ather. Ather, is probably going to be in focus because of a large block trade. The National Investment and Infrastructure Fund is likely to sell just under 2% stake in Ather. So watch out for this block deal as well. And Interglobe Aviation, finally, they are compliant with the FDTL, the flight duty time limitation norms. And they say they've got now enough pilots to meet these norms. Remember those big disruptions in December? Indigo says they have turned a corner, and they've got the right crew in place now. So that's our stock list for the morning. Pretty exhaustive one. Okay, let's quickly get to some of these numbers, Gaurang. So, actually most of the jewelers, whether it was Kalyan, Titan this morning, PN Gadgil, most of the jewelers have reported good growth. Is Titan still a buy for you at these levels?
So out of the long list that you just listed out, Surabhi, we've been positive on almost all the stocks, barring, of course, there was a little bit of disappointment on Oil India. And
Gaurang, I think we've just lost that line. Okay, we'll get Gaurang back and talk about some of the stocks in focus. Jatin, if I could come to you on the big names that I read out, Apollo Hospitals, good set of numbers, Eicher's numbers, fundamentals looking good in terms of Q3 earnings. In terms of trades, do any of them make the cut for you? Let's start with Apollo, Titan, and maybe a word on some of the others as well.
Yeah, so we believe that this hospital space is looking quite good. So Apollo Hospitals has undergone a decent amount of correction over the last 3 months, and now it is rising from the support level of 6,800. It has witnessed a decent rally, but I still believe that upside is possible towards 7,500 on the upside. The crucial support level for Apollo Hospitals is at 7,100. So that's a good risk reward ratio even to buy at current level. So Apollo Hospital is a buy from our end. Apart from that, speaking about Titan, so Titan is one of the few outperforming stocks that hit a fresh high in yesterday's trading session. So a relatively strong stock, and today I think the numbers will also support the up move. So on the upside in terms of levels, 4,500 is the level that we are watching out for, and the crucial support is placed at 4,240. So 4240 is a support level, and on the upside 4,500 is a resistance. So that is even a good buy at current levels. Apart from that, Jubilant Foodworks is one stock that we like as a trend reversal play. Uh, it has managed to sustain above its short-term moving averages, and it is inching towards that 580, 600 mark pretty soon. So I believe that there is a trend reversal in the case of Jubilant Foodworks as well. So 540 is a crucial support, and on the upside 580 to 600 would be the near-term target area.
Okay, all right. So all three stocks looking good as far as Jatin is saying. We've got Gaurang back. Gaurang, sorry, we lost that line with you. You were making a point on Oil India being a bit of a disappointment. But again, and this is a question in terms of fresh purchases, whether it's Jubilant, whether it's the Apollo Hospitals. We have a query, by the way, on Apollo Hospitals as well. Keshri Jaiswal is saying that he has Apollo Hospitals at 7,400. Should he stay? Should he sell out? What would you advise people? Let's start with Apollo and then we'll get to some of the others.
So first of all, Surabhi, apologies. I have a wonky internet connection. Apologies for that. And that long list that you put down in terms of Q3 earnings, I think the only disappointment slide was Oil India because of the choppy, volatile crude oil prices. We've been positive on, other than Oil India, of course, we've been positive on most of the stocks. We have a positive coverage, Jubilant Foods, be it Eicher Motor, be it Grasim, be it Indigo, be it Titan, and especially specific to Apollo Hospital. I think the healthcare industry is going to go through a major change. We heard even last time in the budget, Honorable Finance Minister Srimati Nirmala Sitharamanji mentioned about medical tourism. In this budget also, there was a detailed, a roadmap given by the Honorable Finance Minister. Most of the healthcare related hospitals, be it Apollo Hospital, where we have a positive coverage, be it Max Healthcare, be it Fortis Healthcare, again on these two hospitals, we have a positive coverage. All of them are going through major capex. So either they are doing capex in their existing facility or they are doing acquisition. This augurs extremely well for this particular sector. And as we all know, the way the opportunity that lies in the domestic market and I always mentioned this, Surabhi, that when you look at healthcare pharma, don't look at pharma, sector in an isolation. Keep pharma, keep healthcare hospitals, and keep diagnostic related companies, and all these three together make a huge universe which caters to healthcare. One thing that I wanted to point out about Apollo Hospital is, and the management about Apollo Pharmacy. You also refer to that. So there is this talk in the market that this particular Apollo Pharmacy will be hived off and listed as a separate entity. However, the management has not given any details on that, but that also remains a tailwind positive. So we've been positive on Apollo Hospital for a pretty long period of time.
Okay, all right, got that. I want to draw attention to Jubilant Foodworks as well, Gaurang. And you mentioned that you are largely positive on the whole list, but specifically maybe Jubilant. And while we're talking Jubilant, how can we forget Swiggy and Zomato? Unrelated businesses, I get that, but these are all plays on consumption, right? And yesterday's move on Swiggy and Zomato was also quite breathtaking. What did you make of it? And specifically on Jubilant, what's your take now?
So here again, there is an interlink, right, in terms of food delivery platform. And of course, Jubilant Food, that is known as Domino's, have their own delivery partners, but they cater, Swiggy and Zomato cater to Jubilant Foodworks in terms of food delivery. So, for Jubilant Foodworks, I think one thing good is that after a prolonged period of time, they are able to maintain the triple SG, that is same store sales growth rate. In terms of overhang in the new businesses that they stepped into, contribution is coming out in a positive way, and it is likely to evolve on a positive side as far as future earnings are concerned. Gen Z and the young population that India has always craves for the food items that are there on the menu of Jubilant Foodworks. So that's again a positive. Very conveniently, if there is any food related inflation, Surabhi, they hike their and customers have to pay for it. In terms of interconnect between Swiggy, Eternal and Jubilant Food, I think again, on Jubilant Food and Eternal, which was earlier known as Zomato, we've been having a positive coverage. For the IPO, however, Surabhi, we have given a subscribe note for Swiggy and Eternal, which was earlier again known as Zomato. For Jubilant Foodworks, I can give you an approximate target price, somewhere close to about 650 plus. And for Eternal, we are targeting somewhere close to about 350. One thing I want to point out about Eternal is that in year gone by 2025, they were able to open up record number of dark stores. They have stepped into tier 2, tier 3, tier 4 cities, whereby market share increases, customer base increases, and that contributes to the top line and bottom line.
Yeah, but Eternal's gone through a rough patch. Now it's managed to recover back to 300. Gaurang is saying that 350 could be possible on the stock as well. So just hold that thought, Gaurang. We're coming very close to 9 o'clock. So it's a good idea to get some, key trades as well from Jatin. Jatin, so we've discussed the Nifty. Nifty, you're saying, is a buy on every dip. What else is looking good in the market? Any trades on Bank Nifty? I mean, we remember that monster SBI move on Monday. What else in terms of stocks as well? What would be your trades for today?
Yeah, see, for today we have two trading recommendations. So in yesterday's trading session, we saw the capital market related stocks doing well. So one we feel that is likely to do well in today's trading session is 361 wealth management. So we believe that in terms of technicals, it has found support at the 50% retracement level, and also in yesterday's trading session we saw a follow through buying interest managed to close above its short term averages. So 361 is a long idea from our end. Stop loss should be placed at 1130. On the upside we are expecting 1215 on the upside. Another recommendation that we have is that is a trend reversal play, Colgate Palmolive. So Colgate Palmolive in yesterday's trading session managed to close above its 4-day consolidation, and it is actually a strong breakout with volume. So that's a price volume breakout. On the upside, we are expecting 2250 from a short term perspective, and the support is placed at 2150. So Colgate Palmolive and 361 are the long trades from our end.
Okay. All right, got that. Jatin, thanks for the key trades today. Let's talk about BHEL and this OFS as well, Gaurang. BHEL, once upon a time, about I think it was 23 or 24, some of these capital good plays, including the PSU plays, where they were the market's darlings. And then everything kind of got derated. What thoughts on BHEL? Would you be at all interested in this OFS, the shares that will come into the market now from the government?
So I think the price tag for the OFS is fair, I feel, first of all. Secondly, as a disclosure, we do have positive coverage on BHEL as well. And Surabhi, if you remember well, and I remember well, I think there used to be a comparison between many years back in terms of capital goods engineering companies, L&T and BHEL. But L&T stood apart with the execution and BHEL lagged back because despite of having a strong order book, execution was very, very low. And that translated into poor earnings, and that's why the faith of BHEL in terms of underperformance. Having said that, I think over the recent quarters, the management has been able to rework their strategy and implement it at ground level. From a long-term point of view, we are positive. So yes, to answer your question, either OFS in open market, you can definitely go and look at nibbling into the stock at current level and then gradually build up your investment with a larger quantity. One thing I want to point out is that I hope the government seriously thinks about divestment. I think this is my personal opinion, Surabhi, that government has no business to be in companies with large stakes. Give it out to the large investors and let them enjoy the fruits in terms of execution and earnings translation.
Okay, so we'll see how BHEL responds. The offer for sale is at a discount to yesterday's closing price. I think it was about an 8% discount. We'll see how the mood improves. Gaurang, I'm going to toss one question to you. I don't know, if you have coverage or not, but maybe a general answer could help. This is coming in from a viewer, Paddy. Paddy, morning to you. He's saying that I have been holding HDB Financial, but now the stock has gone even below the IPO price. And I think the IPO came out around 740. Shares are trading at about 720 now. So he's saying, should I be booking losses? Should I move on? I don't know, Gaurang, if you've had a look at this company, this stock of late. But what would the advice be? Is he just better off looking at something else in financial services? Because a lot of other stocks have, managed to create far more wealth.
Well, there are a lot of ideas, Surabhi, amongst NBFCs. But having said that, I think if I'm not mistaken, and I stand to be corrected, this was an IPO from the HDFC entity after a very long time. I'll also, give you one more underperformance. We saw Bajaj Finance, right? Bajaj Housing Finance, I beg your pardon. Even that, there was an underperformance. Housing Finance, and that IPO was also, that IPO was also after a pretty long period of time. So having said that, I think we had given a subscribe to the HDB Financial Services from a long-term point of view. And again, if I'm not mistaken, we do have a positive coverage. To answer your question, are there better names? Definitely, yes, Surabhi. I think one of the star performer, if I have to mention not one but three, Shriram Finance, I think last 6 months, 3 months, 6 months, 1 year, stellar performance after that deal that happened, and possibility of higher levels cannot be ruled out because their cost of fund is going to go down by 100 basis points. That's what the management alluded to. Second would be L&T Finance, which is also, a stock which made a new 52-week high. M&M Finance, again, a star performer. Bajaj Finance happens to be one of the stocks in the NBFC category, which actually stood out difficult times when the market was down and out. So there are better investment ideas, but with HDB Financials, I think if you are a long-term investor, then give it a little bit of more time. Again, I don't remember whether we have a coverage or not, but just to answer your question, it comes from a good pedigree. And when you invest in stock market, I think you should have patience as well as longish time horizon.
Okay. Fair point. So there are some couple of those, other ideas in financials that Gaurang has given. Gaurang, it's also a good time now to bring up our compounding idea of the day. And you know the drill. One interesting stock idea that's not a near-term, holding. It could be a portfolio holding. You've given some names in financials. Anything new that came up on your radar? Anything you really liked in the earnings season that really calls for a fresh look?
Honestly, I just refer to that, Shriram Finance. Surabhi, the kind of opportunity that lies for this particular company, and of course, the kind of post deal, the statements made by the management. I'll give you an approximate target. I think the stock was somewhere close to about 1,050, if I'm not mistaken, yesterday. A very conservative target, though we need to work it out, is somewhere close to about 1,250. I think if the loan book growth is there and the cost of funds are going to be something that's going to be contributing to the net interest income and margins, and asset quality remains stable, I think beyond 1,250 cannot be ruled out. But we'll have to wait out for that from a long-term point of view.
Okay, so Shriram Finance is Gaurang's compounding idea. I mean, it's today's idea, but it's not compounding in one day. These are portfolio calls for the next several months, if not years. Got that, Gaurang. Before we let you go, I want to go back to Swiggy and Zomato because those stocks were absolutely breathtaking yesterday. Between the two, you've discussed, Eternal, Gaurang, but between the two, what's a better bet? And would you be advising a fresh entry now at all?
So, like I mentioned, Surabhi, Eternal is something that I would definitely advise. Swiggy, we had an IPO note post that we don't have an independent standalone coverage on Swiggy. So I won't give you specific buy note. And the reason why I say Eternal, Surabhi, is that the opportunity in terms of run rate of dark stores, and even this year, Surabhi, 2026, they have a decent lineup of dark stores, number of dark stores that they want to open up. And in terms of, I think, contribution from Blinkit, I'm not saying that Instamart doesn't contribute to Swiggy, but Eternal has a decent amount of contribution coming in from Blinkit. And one thing, Surabhi, was that this particular sector was anticipating overcrowding with new entrants coming in. And that actually spooked these two companies. But people forgot that these two are listed and strong players for quite some time. So while short to medium term, shockwaves could be felt as and when we have new entrants coming in because of discounting, etc., etc. But long term, I think Eternal, earlier known as Zomato, remains to be a preferred investment idea.
Okay, all right. So Zomato, it is. Eternal is the choice that Gaurang is going with. Gaurang, thank you very much for being with us this morning. Great conversation as always. Plenty of ideas. And I'm sure it's very helpful for our viewers. You have a great day and we'll connect again soon.
Thank you. Thank you, sir.
Thank you.
You too.
Okay. All right. Thank you. Well, since it's almost 10 past 9, let's quickly look at what the screen is telling us in terms of the pre-open rates. And the Nifty is looking good. A 0.25% increase is what the Nifty is sitting with right now. That's a gain of about 62 points, taking the index at exactly the 26,000 mark. So the question is whether we'll indeed get a swift move above 26,000 and whether it will last. Gainers include some of the stocks that have come out with good earnings. So Eicher Motors 3% higher, Apollo Hospitals 2.5%, Titan 2%. All your three Nifty earnings are looking quite smart and all the stocks in green territory. There's Mahindra and Mahindra, which is going to be reporting numbers today. And the street is expecting another good quarter from M&M. So 1% up on Mahindra and Mahindra as well. So those are the big movers and shakers. But, as we go on, let's actually continue that focus on Eternal as well as Swiggy. What was it that was powering these stocks in such a big manner yesterday? Was it some value buying? And more importantly, fundamentally, how do you understand these businesses now? What are the takeaways after the third quarter? Well, let's discuss this with Varsha Bang, who is a senior research analyst at Moneycontrol Pro. And she tracks the quick commerce and food delivery space very, very carefully. Varsha, great to have you on the show. Thank you so much for joining in and, getting all ready early for us. But really, I think a lot of people who are asking this question, has something materially changed? Has something materially improved after the third quarter for these two stocks? Because yesterday the buyers were really queuing up.
Okay. So first of all, morning, Surabhi, and thanks for calling me for this show. So overall, I'll say the Q3 results for both the companies were very good. We will say that both are scaling very well, and the part of business are also heading at a very proper way. Talking about the verticals which both the companies have, the major one is food delivery and quick commerce. Now, food delivery is a vertical or a segment, I can say, which is very stable for both the players and it's stabilizing with good growth. Competition has been very rational, where the players are focusing more towards the maintaining margin rather than, going for aggressive customer acquisitions. So overall, the food delivery is a cash cow for them, which is helping them to, so it's a support engine for the other segment. Talking about the quick commerce is a very scalable segment right now, and it's growing at a very high speed. Even we see when the year-on-year volumes, gross order values are also increasing at a great pace. But however, we know that this quick commerce segment is at investment-led space right now, where both the players are also increasing their dark store space, where they can reach new pin codes, where they can reach to new cities, where they can approach the customers. Now, the economics are improving in this particular segment also, where through the larger market size and supply chain efficiency. But in this particular vertical, the competition intensity is so high that the profitability is taking on hit. So overall, I'll say that Q3 for the food delivery is a stable and cash cow business, whereas quick commerce is being scaled aggressively.
Okay. So, and that's the point, Varsha, that in this quick commerce scale up, I mean, till what point does the burn continue? Because competitive intensity seems to be coming back. I mean, a lot of the discounts and offers seem to be back when you open these apps now. So how long is this quick commerce fight, and what happens to the path to profitability here?
Surbhi, I'll just say that, we have seen many players, I mean, non-listed players like there are unlisted players who are coming in the market, and, they are giving a tough competition to both of these players. But as these both players are listed in the market and they have a good market share, which they cover in this quick commerce segment. Regarding discounting, right now, in the recent earnings itself, the management of both the companies has told that now they are not running behind the discounting-led approach. Now they are running behind. Now they want to go as in a price. They want to play on price, speed, assortment, and the availability of the product, rather than just giving discount to customer and acquire a new customer. So this kind of approach they are doing it right now. Secondly, when we see about the path to profitability, so it's currently very uneven. Recently, we have seen in the recent quarter that Blinkit has reached the break-even level, but profitability may still unstable due to as I told, that there's a continued aggressive competition is going on, and Instamart is still reducing the losses. So we need to track very closely all the metrics which they give during the earnings calls and the presentations, how they are improving their dark stores efficiency, how they are giving better assortment. Because nowadays, apart from the groceries, and they are also giving non-groceries items also. So I'll say that we need to track very closely to these segments. And I will say that, they are very secure. They have made their market in the tier 1 and metro cities. Now they are approaching tier 2 and tier 3 cities, which is very new market to them. So break even coming from those tier 2 and tier 3, the newer will take time. So I will say the model is scalable and profitable, but it depends on how they can approach very disciplinedly, and with execution the profits can come.
Okay, Varsha, just hang on for 1 second. I'm looking at how these stocks are doing in the pre-open session now. I mean, yesterday was a massive move. Today they are all flat. They've cooled off. Swiggy is down about 0.3%, as you'd expect. I mean, after such a big move yesterday. Let's get the stocks up for you on the screen. And Eternal is absolutely quiet after a 6% up move. We're also counting down to the market open, and we'll start getting in the rates. Really, the focus today is going to be on a lot of these result-oriented stocks, which have done really well. Jubilant Food is another 3% up. United Breweries 2% higher. There's HEG on the mid-cap screen as well. So that's how it's really playing out. Counting down to the open. Varsha, I mean, just actually let me get to the market opening, and then I'll come back for a final closing comment on Swiggy and Eternal. The focus is going to be a lot of the stocks that have reported numbers, and Eicher Motors is also one of them. First trade's now coming through. We've kicked off the session today 20 points higher on the Nifty. It's a cautious start, actually. You're not getting a straightaway big gap up or anything like that. Bit of a cautious start. 30 points up on the Nifty. Mid-cap index is flashing a little bit of red. The Nifty Bank is flashing a bit of red. 70 points lower on the Bank Nifty for this time. Let's actually, while the index finds its feet and finds its direction, let's focus on stocks and stocks where earnings have come in, because we are getting some sharp reactions. Eicher Motors, the market really likes these numbers, and the fact that there is a EBITDA expansion, margin expansion, 4% up on Eicher Motors, really revved up this morning. Then you've got Apollo Hospitals. Apollo Hospitals numbers also looking very, very good. And the stock is up about 3.5%. Titan itself is up about 2%. Again, 40% growth coming in from Titan. And the market absolutely loves that. It's been a solid quarter despite, remember, record high gold prices. But despite that, the festive quarter has gone down pretty well for most of the jewelers. What else is working today? Max Healthcare, Nestle, these are some of the other stocks. We should just quickly pull up the Nifty gainers if we can. Need to move on stocks now. Let's move around to the gainers tally. State Bank of India is finding some traction. Bajaj Auto, M&M is reporting numbers today. All of these stocks are in positive territory. So this is where we are at this juncture. There's some gain on IT names like Infosys as well, at least at this point in time. On the flip side, some of the, so those are the gainers that I was speaking about. So you can see Titan, Apollo Hospital, Eicher, right up, top of the league tables there. And there are a couple of other names, including some consumer names in the gainers tally. Eternal is, by the way, again now building on yesterday's move. In the pre-open session, the stock was flat. Now it's up about 1%. So it's looking quite smart. Now the losers here, many of them are commodity names. Hindalco, Coal India, ONGC, those stocks are lower. HDFC Bank is a little soft as well. So that's as far as the Nifty screen is concerned. Let me see what stocks are moving beyond the Nifty. Again, it's a result play here. So Britannia 4%, HEG 4%, Jubilant FoodWorks 2%, United Breweries reacting well to numbers as well. So it's all result reactions playing out rather well. One more stock that we should focus on is BHEL. BHEL is down 5% as we're speaking. And that's because of the OFS. The government is selling stake. There is a discount to the market price, and the stock is quickly adjusting to that. So 5%. And of course, there's more supply coming into the market as well. So let's see if buyers come in at lower levels. But right now, BHEL losing about 5% for you. Varsha, to wrap up our conversation on food delivery and quick commerce, there's also the going out business that both these brands are building, right? Both Swiggy and Zomato. District, which is, of course, Eternal's brand. And then I think Swiggy Scenes is what they're calling it, which is, again, I think Swiggy trying to build out its own outgoing business. Could that be eating into profits as well? Is that a bit of a red flag? And overall, what would you advise investors? I mean, what should they study and read carefully before making their investment decisions?
So the apps which they are developing, apart from this Eternal, Blinkit, Quick Commerce, this Instamart and Swiggy. So both the players have different apps also. Let's call it District, and second is having Toying and Snack. So these two players are building the different apps right now. Both are approaching at a different level. District is something where you can go and check out restaurants with discounts, movie tickets are there, some of the live events are there. So it's a kind of a one app. You will get all this facilities, and you can search which one is giving you what kind of tickets, and movie tickets are all there. Whereas coming to the Swiggy is coming with Toying app, where he is trying to approach a low value price range. So where they don't want to go for the high average order values, where the basket itself says 500, 600 for rupees you have to pay. So here you get a meal of 99 rupees, 199 rupees. So this kind of apps they are building up. So yeah, they are eating, even they are not able to bring the break even right now. So definitely they are burning the cash of the main core business, that is a food delivery business. As in the initial commentary, I have said that food delivery is something, a cash generation business for them, both the players, and all the cash is pushing back to these new segments where they can try to bring the profitability. The second question which you asked about the metrics we should look for this quick commerce and the food delivery segment is like, when we say growth is not a question for both the companies, we have seen very well that both have scaled and proven their model in the past. Regarding the food delivery, I'll say we have to watch that the growth is coming without hurting the margins. So they are at least maintaining the margins, not decreasing or not, hampering the margins. and we should look out the ad revenues contribution uptake from the food delivery segment. But when it comes to quick commerce is a strong segment. But we need to keep a close watch on how the losses are getting narrowed down. Also, the metrics like contribution margins, average order values, how they are utilizing their dark stores, and also we need to see how they are utilizing their capital to achieve the break even in a disciplined manner. So overall, I'll say they have to keep a close eye on the customer retention also, because adding just user won't be a workout for them. So customer retention plus execution is a key thing which we need to keep also while we track the stocks.
Okay, all right, Varsha, thanks very much. Good conversation, helps us understand some of these companies better. And the market's excitement, perennial excitement with them. They tend to be a little volatile, these stocks. So I think investors need to do their homework carefully before taking their investment decisions. Thank you so much for joining us today.
Thank you.
Okay, so that's analysis from Moneycontrol Pro. You can, of course, read more of what Varsha writes on and her analysis by joining Moneycontrol Pro. Remember, keep going to the app, check out all the specials that it has on offer. I'm going to get back to the screen. So now the opening is about 0.25% up on the Nifty and absolutely flat on the mid-cap index, absolutely flat on the bank Nifty. It's really a morning that's more about individual stocks than the indices, at least for the time being. If I talk about gainers, look at Eicher Motors. I mean, Eicher Motors is now 6% higher. What a stupendous move coming in on Eicher. Beyond Eicher, I mean, some of the other movers and shakers would be Britannia. Britannia is a 4% mover this morning. That's the Nifty for you. Britannia is up 4%, again reacting to numbers. And Apollo Hospitals, ditto, same story. Numbers have come through so well for some of these large cap names. The market is absolutely celebrating it. That's Britannia, and the next one is Apollo. That stock's up about 5% as well. Samvardhana Motherson, again, company, mid-cap company that reported very good numbers. They're very large global operations as well. The market liked what the management said, so 4% up on Samvardhana Motherson. These are some of the stocks in focus today, so that's how it's playing out. On the losing side, I mean, there are not too many big losers to call out, at least not right now. Hero Moto is under a little bit of pressure. BHEL we've already called out, 5% because of the OFS. There's Torrent Power. That's one stock that's reacting negatively to earnings. Torrent is down about 3.5%. And a couple of capital market stocks are cooling off. So MCX, JM Financial, some of these stocks are on the lower side as we speak. PN Gadgil, which reported great numbers, stock rallied yesterday. PN Gadgil is cooling off about 3% this morning as well. So that's how the morning is playing out. Actually, since so many stocks are reacting to only earnings, it's really earnings and more earnings. Let's just play out all the graphics again. It'll give you the list of today's movers and shakers and a lot of the stocks that are in news, and largely they are being driven by earnings. Take a look at this. Okay, all right. So those are some of the major earnings that have been in focus today. By the way, before we introduce our next guest on the show, let's shift the focus to a big voice that we got from the world of M&A and deals. City India's head of investment banking, Rahul Saraf, who has steered mega deals like the sale of Akzo Nobel India to JSW Paints and the Yes Bank stake sale to Japan's SMBC, spoke exclusively with Moneycontrol's Ashwin Mohan. Saraf spoke about the sudden surge last year in inbound M&A by Japanese financial giants and also tackled a bouncer on the ongoing sale of the IPL team, Royal Challengers Bengaluru. Take a look at this.
One trend that sort of stuck out very clearly last year was the sudden influx of inbound acquisitions by almost all the Japanese financial majors, right? Whether it was SMBC Yes Bank, on which your team worked on, whether it was MUFG Shriram Finance, whether it was Mizuho Evendis. So all the Japanese financial majors struck big deals last year. In fact, not only Japan, you also had Emirates NBD that signed that precedent-setting deal when it acquired RBL Bank. So do you expect that inbound flurry from Japanese financial majors as well as the Middle East majors to continue as far as the financial services segment is concerned in 2026? Or do you think that inbound M&A trend will move beyond these players and sort of spread to European and US financial majors? What do you think?
I think one wave of investment is behind us from the Japanese in the Middle East. You may have some more. We have, of course, worked on IHC Saman as well, which was also Middle East coming into India. And so one wave is, I think, behind us. We will see Japanese and Middle East players looking to diversify into other sectors as well.
Not just financial services.
Not just financial services.
All right.
I think that's something which we are seeing actively. I think the deepening of the sector with all of these inbound investments from the Japanese and Middle East is only a welcome scenario for the India FIG space. For the Europeans and the US, I think it will be much more on partnerships. You've got the Alliance looking to partner with a player in India. You've got BlackRock, which partnered. You already have some of the other European names who partnered on the insurance side. So you'll have some of those partnerships continue and flourish, but not necessarily a full-scale big acquisition that we will see from the European and US players at this point.
I'm going to bowl a bouncer to you. What's happening as far as Royal Challengers Bangalore is concerned? A flurry of IPL deals across several franchises, but all eyes seem to be on RCB and the fate going ahead.
Well, the only thing I can say is that my phone has not stopped ringing over the weekend, through the weekend. So the process is going on, so can't say more. But it's a very strong process. You know,
as the commentators say, there's a phrase in cricket, well left, and that's exactly what you did right now.
Okay, and you can catch that entire conversation, by the way, at 11 a.m. today. So the whole interview is going to be live on our YouTube page. Make sure you go and check it out. That's the big view coming in from City India. For the time, let's get back to the listed equity market where, things are going pretty okay. And some of the positive result reactions are getting very, very well rewarded. We have Amit Gupta now joining us from Motilal Oswal Financial Services. Amit, thank you so much.
Over what is going to happen from the carry trade unwinding, because that is still not clear, because inflation is still high and the interest rates are still relatively lower. So in order to make it positive real interest rate in Japan, they have to increase the rates further. That is something, a challenge we have to face going forward. But from the trade deal perspective, from the FTAs getting signed, it looks like now the export market slowly is opening. And if that is opening, it will lead to better earnings for financials. It will lead to better earnings for some of the exporters. The USD INR, if you look at last quarter, it depreciated by 2%. It has a little bit appreciated, but it's still around 90. So we feel it's a blessing in disguise for some of the exporters. And also, please understand, when there were headwinds of the US export, because of these 50% tariffs, we saw that in the non-US tariff part, they tried to build up the efficiency. We saw in some companies 200 EBITDA margins improvement in the non-US tariff areas. So this is very encouraging that they were working to increase the efficiency, and when the gates are opening for outside US and within US, I think it's a double positive for them now.
Amit, so, given some of the factors that you described, let's talk about the approach in this market from here on. I mean, what are we really looking at? I mean, in terms of sectors, is there a preference? I mean, would you have, a priority order that you would go with? And again, that argument on mid caps versus large caps. I mean, is there an answer that when you are building a fresh portfolio now, should it be more mid cap skewed or large cap skewed?
Yeah. So one thing is very clear: when the FPI flows are not very aggressive, you cannot have richly valued stocks in your portfolio. We need to look at some of the areas, even in the high growth space, where valuations are attractive or relatively lower. I think this is very important. And this is where we are focusing on our portfolio. When we construct a portfolio, we keep our valuations around 20 times or maybe 21 times. And we try to keep the earnings growth around 22 to 25%. Because Nifty is giving you earnings growth of only 8% for financial year 26. And yes, there is an expectation of 14, 15% of earnings growth in financial year 27. So if you can keep your portfolio earnings growth around 25% or maybe higher with the same valuations as of index, I think that is the winning proposition. Considering that in mind, for banking and financial services, we feel currently insurance companies are attractively valued. In the banking space, some large cap private banks, they are attractively valued. You will find picks in the mid-sized private banks also. So I think PSU banks, if you look at Bank of Baroda, for example, it is only 0.9 times price to book. And the return on assets looks like they are improving. The CASA is not a big problem for PSU banks when we compare with the private banks. And I think this is where these banks are getting re-rated in the current setup. When there is a new guidance for loan growth, which is coming from the big daddy around 13-15%. And I think the positivity of this will come into the other stocks also, which are attractively valued. So that's very, very important. Textile space also we are considering, because they have not participated. They had a sharp fall. And now recently there is some pullback, but we feel there are companies which are in the yarn, fabric, and also in the garment segment across the chain, and they are very attractively valued. I can give you example, for example, Vardhaman Textiles. Now, if you see excellent management, and also the yield spreads the spreads are actually widening. So the spreads which are of fabric, which are of yarn, and also the garment, those spreads actually, if they are widening, it's a double positive. So, for example, the spreads from 100 now, they have moved to almost 118 or 120. I think this is where the earnings can get a positivity on the higher side. And polyesters, I think the spreads will widen with a little lag, but at least for cotton, we have already seen this scenario.
Okay. Take that point. So if you talk about from here on, if you talk about FY27 earnings, Amit, and talk about the pockets or the themes where the likelihood of earnings improvement or a sharp earnings upward trajectory, which are the pockets where you see that possibility being the highest? Would it continue to be banks? Would you look elsewhere? Do you see a revival in IT at all? From an earnings perspective, FY27, which sectors are looking best?
So if we are looking Nifty for 15-17%, then banks have to come back in a big way. See, if you look at SBI results, for example, in this quarter, the NIMs were little lower than the last year. And this is the trend we have seen in the other banks also. So 4 to 5% generally the earnings growth have been, if you exclude some of the one-time cases. And I think from here onwards, the case is that the NIMs should get stabilized, because the further transmission of interest rate cut has to happen. There is no point of going with further rate cuts now. And this is where banks actually can do better from the NIMs perspective, from the credit growth perspective, and from the return on asset perspective also. So we have seen some mid-sized private banks which are moving into wealth management also. So if you are moving into wealth management, your commissions can increase. We are seeing some of the banks which are utilizing their branches to go big time into the insurance selling also, wherever they have joint ventures. So it can increase the commissions. We have seen some of the banks where private equity is taking position. So you take the case of Blackstone, which has taken 10% stake in Federal Bank. So Blackstone has 37 subsidiaries in India, and we feel those subsidiaries can look at putting their CASA into the Federal Bank. So it can obviously increase the NIMs for the bank. So I think these are something which are very encouraging sign. And with export with export market opening up, I think this will lead to further leg up. I think this is very important space now, banking, along with some ancillary companies. For example, capital markets. If the broader market is doing better, I think capital market can come better. Though FPI flows still are not very, very sustainable. But yes, some of the stocks which have declined, I think they can be benefited. NSE going forward may be listed on BSE. That is another trigger. You don't have options on NCDX. So my sense is NSE listing on BSE is going to be more confirmed. And that is where more derivatives volumes on BSE and the volumes can pick up actually there.
Got that point. Interesting conversation, Amit, as always. And we hope to have more of you, on money control going forward. It's very, very helpful advice to our viewers as well. Helps them think about their portfolios and how they want to take their positions in the market. You have a great day today, and we look forward to connecting again. Thank you for joining.
Thank you.
Thank you. All right. Well, with that, let's just quickly glance back at the screen. Today, it's an interesting morning of trade, by the way. The Nifty is absolutely flat because that stock, all that action is very, very stock specific. And we've been talking about the stocks which are reacting to earnings like Eicher, like Apollo Hospitals, like Titan. The index is cooling off. So the index itself is not finding momentum, at least early in the morning. The mid-cap index is down about 0.3%. So keep watching the screen. There is some profit taking that's happening, given the run-up that we saw in the last 3 sessions. So there's some caution out there in the market for sure. Bank Nifty is also on the lower side as we speak today. On the Nifty, just to check, on the Nifty, the losing stocks continue to come largely from the commodity baskets. So ONGC, Coal India, Hindalco, these are stocks on the lower side of the screen. So that's how it's playing out, at least for now. That's the Bank Nifty also gradually drifting lower. But tell you what, I think we're going to step away from the immediate live market action, this morning's trade for a bit, to understand what mutual fund investors did in the month of January. Now, the data from AMFI, the Association of Mutual Funds of India, came out yesterday, and it threw up some absolutely spectacular trends, to say the least. And what are these trends that I'm talking about? Equity, or rather investors in India, mutual fund investors in India, put in more money in gold and silver ETFs in January than all the money put together coming into equity mutual fund schemes. We're talking about 33,000 crores going into gold and silver ETFs and a sum total of about 24,000 crores coming into equity funds. Now, what to make of this trend? Is it a one-off? Is this investors just chasing returns? And, is there a risk building over here? Well, to discuss some of this, I have with me Feroz Aziz of Anand Rathi Well, and in a bit I think we'll get DP Singh from SBI Mutual Fund joining in as well. Let's see if I can get to Feroz. Yeah, Feroz is with me now. Feroz, good morning. Good to be connecting. Money Control for the first time, so glad to see you on the show. Feroz, I think you're on mute. Can't hear you.
Yes, sorry, Surabhi, extremely sorry. Of course, this is the first time I'm talking to you when you're in Money Control. I'm sure that's a great value add to Money Control to have you host it. And especially the market show, I was listening to the previous guest, the kind of conversation content really, really added value to me as well. So all the best, Surabhi. And I'm looking forward to having an interaction with DP sir today and more interactive sessions with you on Money Control in the future as well.
Well, glad to have you in, and let's see if we've got DP sir joining, Mr. DP Singh from SBI Mutual Fund. While he connects, Feroz, let me get your opening thoughts. I'm telling you, I was having tea, and I think my cup literally fell out of my hand yesterday when I saw those ETF numbers. 24,000 crores in gold ETFs, 9,000 crores in silver ETFs. What's going on? And are you worried?
Am I worried? I'm not surprised. Fortunately, I was not holding a cup, but even if I was holding, I wouldn't be surprised because the human behavior aspect, when I've met thousands of HNIs, the FOMO as an attribute is so strong that I wouldn't be surprised that if silver gave 2% return every day, people say I'm missing out, and this is going to $300 and 10 lakh rupees per kg of silver was an easy extrapolation which people were doing. Now, that's when a derivative algo trader makes best use of the momentum to squeeze the gamma of the market, especially in Chicago Mercantile Exchange. Now, this is a little complex subject, but I'm using the word gamma squeeze. Short gammas were squeezed. Of course, in the world of AI, one could use it to simplify what I'm trying to say. For the lack of time, I'm restricting it here. But all these episodes of Oracle in one night, one result going 42% up in US, Infi ADR going 35% when we slept, and the silver going 30-40% in a month up, and then coming down 30%, it's got nothing to do with silver and its industrial demand. People are not understanding. It's just a gamma squeeze, and one needs to understand why these episodes to understand. So I think in a gamma squeeze, will a retail guy feel a FOMO? The answer is a big yes. More so, HNIs have bought. Retail have been so sensible. I'm so proud of being an Indian citizen that Indian retail has been so sharp. 31,000 crores in SIP, right? You look at April last year, when Trump actually announced the trade war, practically calling it the Liberation Day, retail still bought 26,000 crores. HNI sold. Every month when markets are down, HNI is selling lump sum. Retail is buying. And they've been far more pragmatic. Because, of course, it's easier said than done. HNI is seeing a 3-4 crore movement in his portfolio every day. It's difficult to keep emotions in a compartment.
Okay, so I mean, those are the trends and we have to make sense of them. I think we've got Mr. DP Singh. Can we get him on the screen as well? Yes, we have DP sir with us now. Good morning,
Hi.
Sir.
Good morning.
I took almost... Sir, I took almost 24 hours to digest what investors have done in January. And I was just asking Feroz to help us understand it. 33,000 crores going in gold and silver ETFs. More than the money going in all equity funds put together. ये क्या हो रहा है, sir?
जो भी हो रहा है, मतलब ये समझो कि हिंदुस्तान की जो जनता है, इसमें हर तरह के मतलब व्यक्ति पाए जाते हैं. बट ये जो फोमो है, मतलब मिसिंग आउट ऑन नॉट पुटिंग मनी इन गोल्ड एंड सिल्वर. आई वाज हियरिंग फिरोज आल्सो व्हेन ही सेइंग कि ये 2% अगर एक दिन में बढ़ेगा, मतलब it's like that society which is putting money in risky assets, not putting in equities and putting in these assets. But honestly speaking, I'm very happy on one part. None of the fund houses, none of the responsible player has gone out and say all out, no, now you put money in gold, now you put money in silver. This is a general behavior which has happened. But the best thing is that a lot of money has started moving into multi-asset allocation funds, which are putting part of it into gold and silver, and people have made money out of that. That's one of the best and most responsible thing to happen. And the best part is that the people who are coming here, they are coming like they are putting money in gold and silver like they were putting in crypto. Crypto, fortunately, unfortunately, is not there in the mutual fund things. But the way they are behaving with gold and silver is the way they are behaving in crypto all across the globe. So that's the way I have to look at it. But this is one of. I don't see, I don't foresee that this 33,000, 34,000 crore coming in gold and silver every month. This month itself, you will see the reversal. And see, out of this 34,000, 35,000 crore, I think 3,000 to 4,000 crore would have come through multi-asset allocation funds also, which also reflects in this. Because multi-asset allocation funds also put money.
Okay, fair enough, yeah. They put money in ETFs as well. Yeah, some of the multi-asset allocation funds.
Yes, that's fair. And that's
got that point. But you know, Feroz, yes, DP sir, go on, please, go on.
No, please go ahead. I've lost it now.
No, I was just asking Feroz to come in and say, so what DP sir is saying is quite reassuring that, you know, maybe this is just a one-off trend and hopefully those numbers will kind of, you know, become a little more balanced as we go forward. But Feroz, at some level, it makes you question. I mean, you and I have been doing these shows for 15 years, right? Talking about asset allocation, a balanced portfolio, you know, measuring your risk profile. But when you see this kind of data come in at the peak, you know, when gold prices have already rallied some 100%, silver is up 150%, and then you see this kind of return chasing, it makes you wonder whether the lessons have indeed been learned. Your thoughts?
Surabhi, one thing which, if I comment on what DP sir said, is the industry responsible? That's very, very important. See, if an industry like a very important mutual fund industry, which is growing leaps and bounds, if their top players use the momentum to garner more assets, which they could very well do, right, from in the business interest, if they don't do it, it is very, very important point to reflect on. That's very, very important. Now coming to was this propelled by institutional backing? The answer is no. Is recency bias going to be there in human beings? It is time tested. You go to 1929 depression, US, people got into FOMO and bought at 10, 15 times leverage. And that I'm speaking about 100 years back, US middle class. Right? So recency bias is always going to remain in a human heart. What do I mean by recency bias? This has happened with NASDAQ about 5-6 years back, you know, where people bought NASDAQ left, right, center just before the 25-30% fall of NASDAQ. So this has happened time and again. In the last leg of rally, where it is time equals money, people jump in. So am I very happy that institutions behaved so responsibly, especially the large ones? Second, am I surprised with FOMO? No. Will it reverse? DP sir, मैं सहमत ज़्यादा नहीं हो सकता कि वो reverse हो जाएगा. और we see, Surabhi, when we look at asset allocation, we're looking at one portfolio. India is a very large country. We have 241 lakh crores of gold in India, right? So if somebody went to financialize it, or even if he said that I will buy a little more in the form of ETF, it is going to be large values, right? Because we are just speaking about 24,000 crores on a base of 241 lakh crores of gold holding Indian households have.
So let me go back to Mr. Singh for some thoughts on this. Mr. Singh, now from an industry perspective, you're saying a lot of the players are being responsible, but will this also give rise to more commodity ETFs? Just because they end up being the flavor of the day or the flavor of the season, and could that be creating its own challenges and risk for investors? I mean, and I wouldn't blame the industry. We have investors asking us how to invest in copper. Koi copper ka fund bata do, koi silver ka, koi aluminum ka fund bata do. You know, people typically are looking at what's happening on the screen. They're not getting their desired return in equity, so they're willing to try everything else. What is the kind of mutual fund industry response you would expect over the next couple of months?
Yeah, well, first thing first, as the ecosystem stays in India, as the regulatory requirement is, all the ETFs are backed by the physical gold and physical silver. Where silver is difficult than gold to store in the physical mode, but copper, it's impossible. Copper, it's as of now, if it continues to be the same regulations, then I don't foresee any other commodity ETFs coming immediately. But yes, we are playing other commodities through the investing in the companies which are dealing with these things, which are in the public space. That's how we are doing it. But ETFs in the copper or aluminium, is not likely to happen immediately. But there are global funds which are doing this, which are multiple resources. ETFs are there. But unfortunately, we don't have any access to that from mutual fund side. Only way it can be done is through GIFT City, through LRS mode, where it is not picked up as of now. But the fact remains that as of now, not in foreseeable future, we can't see copper ETFs or aluminum ETFs or anything else of that sort. Only way to participate is through the companies, which we are already doing through our commodity related companies fund like Comma Fund or something like that. But no ETFs as of now.
Yeah, okay. So overall on the numbers and the flows, Mr. Singh, what's your sense? I mean, overall equity flows were fine. Interestingly, there was some shift towards large caps. I mean, large cap funds month on month pulled in more money. There was a month on month dip in the flows coming in mid cap and small cap funds. What did you think of that? And like you're saying, I mean, multi-asset allocation funds as well, over 10,000 crores coming in. Is this a lasting trend for MAFs, as they're called?
I tell you what, today when we look at the numbers, 24,000 odd crore has come into equity asset and 17,000 crore has come into the hybrid asset class. And out of hybrid asset class, see only arbitrage fund, which was leading the chart earlier, is only 3,000 crores. Almost 10,000 crore fresh money has come into multi-asset allocation funds. That's the trend. That's the highest category amongst all the equity and hybrid put together. So that's the asset allocation which we have been advocating for so long. More and more money is coming. SIP book of multi-asset allocation funds is increasing. So that's what one major societal pulse is saying us. See, what is happening to the players like us? We need to feel the pulse of the society at large, not the individual, one class, one niche, because that's what our role is. So that's what we are saying. I think we are walking the talk, and see, more and more money will continue to come in multi-asset allocation funds. When people are looking at the gold and silver in one way, a lot of interesting things happening in equity market. Though market has not moved much, of course, last few days it has given some green shoots. But yes, a lot of the underlying, a lot of underdogs have come up. They have increased their valuation. The rebalancing is happening. So I think that can be captured only through the equity funds. And coming to your question on the large cap funds, yes, large cap funds are see. And when we look at the net inflows today, we have to look at it. The redemptions have been less rather than inflows have been more, because we look at the net numbers. Redemptions in the large cap funds, because large cap funds have given better returns than any other fund. So naturally, whichever category is giving better returns, the redemptions get muted. So if we look at overall numbers, it's not very net of SIP trigger. This is not that big a number in the industry, large cap funds also.
Okay, got that point. Feroz, coming to final thoughts, I mean, if I ask you to kind of take a crystal ball and gaze into the future, I think all of this is stemming from the fact that equity markets have not been giving the kind of returns that investors are used to. You know, particularly mid-cap and small-cap funds. It's been a painful last 1 year. And therefore, the shift to multi-asset, therefore the shift to now these ETFs. What do you see ahead in the months, and what's the advice, more importantly, that you would give out to investors at large?
Yes, Surabhi, I think if you look at the headline number, people have not made money. But the last 1.5 years has been a classic textbook definition of rupee cost averaging. I was seeing a large and mid-cap fund, SIP, for the last 1.5 years, just to see whether when Nifty has gone back full circle, 21,700 3 times in the last year and a half, and come back to 26,000. And I can say that 1.5 years of time correction, what has SIP done? It has done 11%, 12% compounded for the last year and a half. So point I'm trying to make is we derive our perception by looking at headline numbers. Rupee cost averaging, which is something which people keep explaining to create that 21,000 crore book, is actually worked. And we're not looking at retail portfolios as much as I should. So I'm looking at them subconsciously. I don't look at them because I'm in the business of action. That's point one. Point two, from a crystal ball gazing perspective, Indian retail is going to continue to be sensible because institutions are directing them in the right path. 31,000 crores, I wouldn't be surprised by the end of next financial year would become 40,000 crores. If that became 40,000 crores, the 7,88,000 crores of DII purchase, which happened in the calendar year where FII sold 1,66,000 crores, being the highest ever, they could still sell only 20% of what DII bought. So where will market head will depend on how much will DII buy. And when money is moving from volatile or light hands to stronger hands of permanent residents, stocks have gone into permanent hands. That's what I would consider DII is, at least for the next 10 years, it's a permanent hand. So every unit of money which comes back from FII, the rise in the market is going to be larger than we could envisage.
I like the optimism with which we're coming to the final thoughts here, Feroz, and always good to be optimistic, right? And that's very well said, that through this difficult year of the market ownership changed hands, and DIIs now really rule the roost. And this is just our money, our flows in an environment where patience is being tested. So you're absolutely right. As and when the market gets its momentum back, the equity market, I'm sure investors will be rewarded. Mr. Singh, of course, as someone who's at the helm of the country's largest, mutual fund, what would your advice be? Because like I said, I mean, people have this propensity to try everything and chase returns. It's just human psychology. So what would your advice be for 2026 to mutual fund investors?
Surabhi, I mean, just before responding to your question and taking the discussion forward, what Feroz was talking about, when I looked at the chart which you are showing there, the 30,002 crores in December and 30,002 crore of SIP flows in January, it gives a message that the SIP's flows are getting plateaued. But let me clarify one thing. In the month of December, in the month of November, last 2 days were non-working days, and the SIPs of those 2 days came in the month of December. Okay, December number was little this year. So that's why if you look at it, if you take away that, every month it is going up from November to December, December to January. Yeah. Every month 500, 600 crore, and what Feroz is talking about 40,000 crore. That is very much doable, absolutely doable. As far as the market behaving well, market doing well, I think the trend has already started, and so many interesting things happen in the market the other day. Actually, I was surprised to look at the 9th February. One particular example I'll give you of State Bank of India. Everybody was talking about SB share is little at a discount, and one day going up by 7.6%, 75,000 crore market cap has been added in one single day, and which has never happened in earlier. So that's resettling which is happening in the large cap stocks and some of the things which is happening. And the people who are there in the market, who are who are invested, they will get benefited. Anybody who is getting money out from here, putting it somewhere there, so that historically has not worked out. Remaining invested is the key. Remain invested, things are happening in the market, you will get benefited. And I've just given one example. There are so many such examples which I can quote. But anybody who was there where the stocks are there, will get benefited out of it. So remain to the course.
No, absolutely.
Whatever is coming, that's very important. Yeah.
Absolutely, very well said, and advice very well taken from both Mr. DP Singh and Feroz. And I'll just cite an example from today's trade. You would think this market has gone nowhere, Nifty has done nothing, it's constantly stopping at 26,000. But if you're in the right kind of mutual funds, which are investing in the right kind of stocks, just today's example, Eicher Motors, which is up 6% today because it came out with good numbers, is up 56% in the last 1 year. So who's saying that equities are not making you money? It's all about perspective. It's all about buying at those lower levels, keeping those SIPs going, and keeping the faith in the right kind of funds and the right kind of companies. I completely take the message that both of you gentlemen have driven home, and it's a message very, very well received. Thank you very much, Mr. Singh and Feroz, for joining in. Offers us a great perspective and context, not to look only at the headlines, at the headline index. Look at the manner of investing, and rewards will surely come. Thank you for joining in. Both of you have a fantastic day, and thanks for joining us on Money Control.
Thank you very much.
Okay, viewers, with that, thank you so much. With that, it's time for me to wind up this session, and I end with the same note. I mean, just the discussion that we were having, it's not about the headline index today or otherwise in the last 1 year. It's more about individual stocks, because the Nifty is telling you nothing is happening in the market. It's completely flat. Look at stocks. Eicher Motors 6%, Apollo Hospitals 5%. Let's quickly show these stocks before I wind up. Apollo Hospitals is up 5%. Eicher Motors is up 6%. Britannia is up 4%. So many names. I could just go on and on. Samvardhana, Motherson 4%. So it's all about specific stocks that are leading the charge today. Well, that's where we'll draw a close. Thank you very much for being with us on today's edition of Opening Bell. I'll leave you with some of the interesting brokerage commentary that we picked up this morning. And of course, we'll come back with more updates on the Money Control YouTube page. So keep it with us.